You're listening to Witham's Taxing Topics. When it rains, it pours. Tax regulations and guidance are dynamic, continually changing domestic and international financial waters. Step under Witham's umbrella to better weather the storms of trending taxing topics. We'll share the essential news and information you need to prepare for what's ahead.
Hello, everybody. My name is Manpreet Sangha, and I am a manager here at Witham in the International Tax Group. I'm joined today by Marcus Dyer, a principal in our tax controversy group. And we're here today to talk a bit about the Farhy case that was recently ruled on, and a bit about 5471 filing requirements, Form 5471 filing requirements, and taxpayers' obligations to disclose foreign shareholdings, foreign assets, and foreign transactions more broadly. So I thought we'd start today talking a bit about Form 5471, what it is, why it's required, what information is disclosed on the form. And Marcus, you'll talk a bit about the Farhy case, and we'll talk a bit about the implications of the ruling and where taxpayers should go from here. I'll start talking a bit about Form 5471 and the obligation for U.S. shareholders to disclose their shareholdings in foreign corporations. A foreign corporation is exactly what it sounds like, which is a company organized outside of the United States. And US shareholders of those corporations have to disclose their shareholdings on Form 5471. And they also need to disclose transfers to foreign corporations, transfers of cash or property on Form 926. So all of these rules are statutorily required. And the Internal Revenue Code sections covering these are 6038, Cap A through D, and all the regulations promulgated thereunder. So Form 5471, again, disclosing U.S. shareholders disclosing their shareholdings. There's different categories of filers. And Marcus, I don't know if you want to talk a bit, about categories of filing and what we tend to see. Taxpayers, needing to disclose whether it's a wholly owned subsidiary or a director of a foreign company that may have another U.S. shareholder that has acquired a shareholding.
Yeah, so I will touch base on the different categories as the Farhy case touches upon them. I mean, to go into in depth on the different categories is beyond the scope of this podcast, but suffice to say, the type of category filer one is impacted by the Farhy case.
Great. So again, U.S. shareholders, whether you're invested in a foreign company, invested in a foreign partnership, or have a branch in a foreign country, you likely have a disclosure and information reporting disclosure requirement. So that's just to set the table here, and maybe we can move over to the actual case, Marcus, and you can talk a bit about the facts of the case, the law that was applied, and it really kind of focus us in on this statutory assessment of the $10,000 penalty.
All right, Manpreet, glad to talk about the Farhy case, and thank you for that general background. Farhy is a case about an individual taxpayer who failed to file his required 5471s. He failed to do it for several tax years. Farhy is, however, about the worst plaintiff imaginable. However, from 2003 through 2010, he owned 100% of a foreign corporation, I believe, called Katumba Capital. It was incorporated in Belize. And then from 2005 through 2010, he owned 100% of another foreign corporation, I believe, called Morningstar Ventures, again, incorporated in Belize. And during these tax years at issue, the petitioner, Farhy, participated in an illegal scheme to reduce the amount of income tax that he owed, and he admitted to this. And for each year at issue that he was required to file Form 5471, he did not. On February 9th of 16, the IRS, mails to him a notice of his failure to file these required forms. So all he's got to do is do it now, right? Do it then. But he still didn't file them. So unsurprisingly, for each year at issue, the Farhy's failure to file was deemed willful and not due to reasonable cause. And as a result, the IRS assessed an initial penalty under Section 638B. That's an important point there. Imposed under Section 638B of $10,000 for each year at issue. And on November 12th, 2018, they assessed what's called a continuation penalty. Okay, so if you're notified, as you know, Manpreet, and still don't comply, there's more significant penalties that are imposed. And again, this is under Section 638B. Okay, continuation penalty here, totaling $50,000 for each year at issue. Okay, then the government follows its standard operating procedure. Once it assesses, it wants to do what? It wants to collect the tax. And it attempts to do this by way of levy. Farhy pumps the brakes here. He says, "Whoa, wait a minute," and he challenges this collection action that the government is taking in court. But rather than make the typical argument that you make in these cases, and claim that the government's collection actions are cruel or severe or harsh, Farhy contends through his counsel that the IRS doesn't have the statutory authority to impose and thus collect the penalty. The argument goes that although the IRS imposed the filing requirement under 6038A, which is fine and legitimate, they argue the penalty provision there, they impose the penalty under 6038B, and they do that without the statutory authority to assess and collect. And the court agrees with Farhy's argument, and thus, according to the court, the government does not have the statutory authority to assess, and because it does not have the statutory authority to assess, it does not have statutory authority to collect. And there's the whole statutory scheme by which the government can assess taxes, again beyond the scope, but just suffice to say, if the penalty is imposed under 638B, the court saying you do not have authority, the government, to assess, and thus you cannot collect.
And Marcus, maybe I'll jump in there. So 6038 has been around for a while, right? It's probably been on the books for let's call it 50 years. So this isn't a new provision. This isn't a new requirement. This isn't out of the blue. Similarly, the penalty provision has been around for just as long. So I think it's only in the past decade or maybe two that these notices and penalties have been pursued by the IRS, because again, it's quite simple. These filings are being overlooked quite often. In fact, many practitioners may even still be unaware of the requirement to file these information returns. So the fact that this argument is only being raised now is what I find incredibly interesting about this case. We've all probably, those in the cross-border tax field have probably wanted to raise this argument, but luckily Farhy's counsel went through with it. And it really lends itself to the question. Well, I guess the first question is, do you agree with the ruling, Marcus?
Yeah, I do. I follow the court's rationale, and to your point, Manpreet, we've may have had questions about this, and we've gone along for years, but this is actually the argument that Farhy's attorney makes is actually not new. The taxpayer advocate actually has alerted the Congress to this fact, I think as recent as 2020, questioning the IRS's statutory authority. The Congress has not acted, and the IRS has continued to pursue this this enforcement mechanism here, but things finally came to a head, and Farhy, finally we had I guess a taxpayer willing to advance the argument before the court.
Right, right. So I guess then the next question becomes, well, where do taxpayers go from here, right? Because in this setting, I've seen these penalties assessed, particularly when taxpayers are trying to come clean with their reporting, and whether it's a streamlined program or delinquent information return program, because the IRS has a few programs that taxpayers can avail themselves of. These penalties are generated by the IRS's computer system, seemingly as a matter of course. So I'm sure there are a lot of taxpayers out there that have received this notice, and some either pursued reasonable cause sort of a reasonable cause sort of argument, but I'm sure that there are many taxpayers out there that simply paid it, thinking that it was rightly assessed, and they failed to meet their filing obligation, and it's right in a statute, right? You can't really, statutes are not the easiest to contend, right? It's not a Treasury regulation. It's not an agency's interpretation. It's right there. So I guess the next question then becomes, well, where do taxpayers go from here? Particularly, the ones that may have got that letter in 2016 and simply paid their penalty, or those that received it in 2021 and might still be holding on to it, or even those that received it after the ruling was issued. What should taxpayers be thinking about now? Because again, this ruling doesn't mean that you don't need to file your Form 5471 or the wide variety of other information returns that are required for cross-border disclosures. But what should taxpayers be thinking about that may have received this letter, have previously received it, or may receive it in the future?
Yeah, great question, Manpreet, and there's so much to unpack here. And first, I'd like to start with one of the latter points you made, and that is that taxpayers still have an obligation to file 5471, and yeah, and that's generally true, right? I mean, the court didn't challenge the IRS's authority, to demand the taxpayers file Form 5471 or disclose their interests in a foreign corporation. That's not being contested. The question is, what can the IRS do about it if there isn't compliance? That's really the issue. And one of the things that the government could do is they could file a civil suit. That's something that the court mentioned, as a means of enforcement. So it's much less likely the IRS would go that far, but so that obligation is still there. And having said that, if taxpayers have figured that there was legitimate grounds to impose and collect the penalty, and they did pay it, the question I get is, are we all going to get refunds, or is the IRS going to just start shipping out refunds? And the answer to that is no. You're not slated to get you're not slated to get refunds, and thus what you need to do, in my view, is to to contest the penalty. If you can file a claim for a refund. Now, the IRS will likely not grant your request currently, because the IRS has not agreed with the tax court's position. I think it's important to understand that. The IRS does not have to comply with the tax court ruling, because the IRS still has the power to appeal the court's decision. And until the IRS does that, until the IRS either consents to the determination or exhausts its appeal rights, you know, the IRS can continue its enforcement, or it will continue its enforcement as if the ruling were never were never handed down. And theoretically, the IRS could take this all the way up to the Supreme Court, and that could take a long time. You know, to give you an example, there's a recent tax court case that went before the Supreme Court that was was somewhat similar in terms of it involved the IRS taking enforcement actions, and that's the case of Boschler PC v. Commissioner. And from the date of the action by the IRS to the time that this case got to the Supreme Court, like over 7 years elapsed. So that gives you kind of a frame of reference there for how long it can take. So there's a long time, and so if a taxpayer gets a penalty that's assessed, I would say that they should challenge that penalty. I would certainly raise the Farhy case, but realize that that's not binding on the IRS at this point, and I wouldn't hang my hat on that, on the Farhy case. I would argue reasonable cause if that's available. Obviously, that wasn't available for Farhy, but if that's available in your case, I would make that argument and assume that nothing's going to change until the IRS either consents to the judgment, to the determination, or it exhausts all of its appeal rights.
Right. And I think it's important to point out why reasonable cause wasn't available to Farhy is because the violation was willful, right? The omission was willful. So, he wasn't, the most sympathetic plaintiff, but he prevailed. So, it seems like taxpayers are still left holding the bag in a way. It's not a clean cut ruling in everybody's favor. It's also not entirely clear how far this extends, right, Marcus? Like these penalties are assessed across a variety of forms. In fact, even with a 5471, a penalty can be assessed only for a Schedule M or an omission of a Schedule O. So, you run into these issues of like, well, how far does this extend? So do you have any thoughts around that?
Yeah, and actually the court, the court ruling even speaks to that, and so we cannot even say, to the point, to your point, Manpreet, that this applies to all, 5471s. I mean, if you're certain, category filer of 5471, this ruling, does not apply, and applies to others, and there are other forms that this ruling would apply to outside of 5471, foreign reporting forms, such as forms under 5472, 8938, 926, and in some instances under certain categories, form 888 65. And so some of those things you're going to see probably additional challenges under the same theory for some of those same filers. But having said that, you have to be careful, because the court ruling does not apply in the case of Category 2 or Category 3 Form 5471 filers. It does not apply to Forms 3520, Parts 1, 2, and 3, or Parts 3520A.
And those are, I was just going to say, those are related to foreign trusts, right? Receipts of property. And so you might have, people that are, in the U.S. Receiving distributions from a foreign trust that really, may not even think that that's something that needs to be disclosed. So, this, it's so far reaching across so many information disclosures. And it's not even necessarily about paying a tax, right? Like a Form 5471, there may not even be a tax due as a result of the non-U.S. operation or from the non-U.S. company. It's just a reporting disclosure. So I think that's important to highlight too.
Well, that's exactly right. There's not a, this is not necessarily associated with a tax. It's just a penalty. It's a disclosure penalty of a position in a foreign corporation that these things all go to. It's not about a loss of revenue for the for the government.
Right. So I
But
guess, Marcus, where do we go from here? Do we just hang tight for 7 years while this makes its way through the courts? Do we, how can this be interpreted in a meaningful way, that, taxpayers can take an actionable item, whether that's, again, dusting off an old penalty that they may have paid, or, figuring out, well, whether they're omitting any filings as well, right? That should always be part of the action plan. But what else should taxpayers be taking away from all this, while we figure out whether or not it's going to be, the ruling is going to be appealed, and just how far the IRS will take it, or if Congress acts, right? Seems like a simple fix, if some congressional action is taken, although I don't know how likely that is. But where do we go from here?
right. So what I would recommend is to be proactive with these. If you paid the penalty, file a claim for a refund. It's likely to be denied, or file for a protective claim. Okay, that's there's a statute of limitations of assessment, for refunds. I don't necessarily know this would fall under that, but who knows what argument the IRS, tries to make. So I would do that. I would ask for the money back if it were paid. Don't count on the interpretation, which I think is a smarter interpretation of the IRS. If this ruling is upheld at the appellate level, that the IRS, will be automatically send out refunds to everyone who paid it. Again, I think a strong argument can be made the IRS has to do that, but I'm just not so sure that argument will carry the day. So I would recommend doing that. Even if you just file a claim for a refund, if you get assessed a penalty, challenge it on the basis of reasonable cause. Also cite the Farhy case. Just don't hang your hat on the Farhy case. So I'd be very proactive here, and very hopeful that we'll get some relief either at the congressional level, or the IRS will concede the case, or the IRS will go ahead and start working its way up through appeals, and in the lower court ruling will be upheld.
Okay, I think that's a reasonable approach. Given where we are, maybe the IRS will issue some guidance on this. Who knows? This could go in many different directions. So I think it's important for, again, as you said, taxpayers and tax professionals, to just be proactive about this. Think about where it may have impacted yourself or your clients. And of course, Marcus and I are always here to help, and analyze your facts, and figure out a good path forward, on matters like these. So with that, I just want to thank you today for listening in, and have a nice rest of your day.
You've been listening to Witham's Taxing Topics. Contact us with your feedback or suggestions for future podcast topics. Visit www.witham.com for additional information. Send an email to info@witham.com, or follow us on Facebook, Instagram, or Twitter @WithamCPA. Thank you for listening.